Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, brought to you today by iron ore developer Strike Resources, ASX code SRK. I'm Matt Birney and I'm joined now by the Managing Director of Strike Resources, Will Johnson. Hi, Will.
Hi, Matt.
Now, look, Strike Resources is on the verge of joining the elite club of WA Pilbara iron ore producers after securing enough debt funding to catapult its Paulsens East project into production. The company is already producing 65% high-grade iron ore out of its Peru operations, and curiously, it also owns 43% of Lithium Energy, a lithium brine explorer that listed on the ASX at 20 cents last year and is now trading at closer to 90 cents. Okay, Will, before we dive into your new debt funding agreement, can you firstly tell me what type of iron ore are you looking to mine at Paulsens East, and what's the current resource up there now?
We're aiming to mine DSO, or direct shipping ore. It's going to be mostly lump ore, and it's going to be very high grade, at least 62% Fe, and that sort of grade and being lump attracts a good premium in today's market. In terms of resource size, we've got close to 10 million tonnes at an average grade of about 61% Fe.
Are you seeing any potential upside to that resource, or is it still open, or have you pretty much defined it now?
Look, there certainly is some upside. We think there's some extra strike of about 1.6 kilometres to the southeast, so we'll certainly be doing some more exploration over the next year or so to see if we can exploit that as well.
Okay, so you're about to go mining. You've fully funded Paulsens East to production now. How much money did you raise, and who did you raise it from, and on what terms?
We raised it as debt funding, $10 million Aussie, and we've secured it from Good Importing International.
Okay, what sort of form does Good Importing International have in the iron ore business? Who are they? What do they do?
They've been around a while and have got a good track record of ore trading with Australian companies such as Matt Gibson, Carrara, Shree Minerals. Also, we've worked with them last year, and they provided a similar facility to us to get our Peruvian operations up and running. And as I think you know, Matt, we've had a couple of shipments out of Peru, as you mentioned, 65% Fe shipments going to China through them. So they've got a really good track record, both with other companies and with us.
Now, you ran a feasibility study on Paulsens East based on an iron ore price of US $110 a tonne. How much net cash flow is that project predicted to churn out over its initial 3.5-year mine life, and what would that number have been at today's spot price of, I think, $135, $140 a tonne US?
Look, Matt, at $110, we were forecasting $138 million of free cash flow, but at $135 a tonne, then it's $309 million of cash flow over that 3.5-year mine life.
I see you're predicting a C1 cost to produce a tonne of about $60 US, so well done to you, Will Johnson from Strike Resources. Thanks for joining me on Bulls and Bears today, and remember, we're only here to give you information, not advice, which you should of course seek independently. I'm Matt Birney, and this is Bulls and Bears.
For more public company CEO interviews, go to the Money page on the 6PR, 2GB and 3AW websites and click the Public Companies tab.